Bloomberg Audio Studios. Podcasts, radio, news.
This is the Closing Bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlet Fu.
The S&P 500, back to the big caps we go. And man, do I have this right? Because I feel like the split has been all over the place, but we're ending with about 407 names to the upside in the S&P 500. Katie, just 95 to the downside.
No, you're right that
it wasn't like that before.
Exactly.
A little while ago.
We have really good breadth today, even though you wouldn't necessarily know it by looking at the percent change on the S&P 500. But when it comes to the sector change today, you had 9 of 11 sectors in the green, led by healthcare, actually, on a points basis. But it was big tech on the downside.
Well, speaking of big tech, we have a smaller big company from the tech space reporting. Texas Instruments coming out with second quarter EPS of $1.41, beating the consensus estimate of $1.35. Revenue for the quarter was $4.45 billion, also higher than anticipated, which was $4.36 billion. As for the outlook, it sees revenue for this quarter between $4.45 billion to $4.80 billion. Analysts were looking for $4.57 billion. So the midpoint of that range handily beating the consensus estimate. Third quarter EPS will be anywhere from $1.36 to $1.60. Analysts were looking for $1.50. And second quarter CapEx, now I'm going backwards here, was $1.31 billion, more than expected. Analysts were looking for $1.17 billion. And you can see right now the stock, Tim, down about 7% in after-hours trading.
Yeah, there's no commentary from executives in the press release. Going to have to wait to get that from the earnings call, but worth reiterating that revenue increased 9% sequentially. It was led by continued brand recovery in industrial, 16% from the same quarter a year ago. The company also saying that over the past 12 months, they've invested $3.9 billion in R&D and SG&A and invested $4.9 billion in CapEx and returned $6.7 billion to owners.
All right, so just a reminder here, folks, you are seeing a lot of selling in Texas Instruments in the aftermarket, down about 8%. There was some concern and nervousness heading into this report because they felt like the outlook, a lack of visibility, and any obvious growth catalyst might put some pressure on this name, but it's the street not liking it. And you got to keep in mind the stock is up about 15% year to date, but definitely some disappointment here in the aftermarket, Katie.
Yeah, that outperformance might be a reason why you're seeing this after hours reaction right now, which looks pretty dramatic. Like you said, down 8%. Now, of course, their third quarter outlook didn't include changes to U.S. tax legislation, so maybe that explains some of the negativity here. But we've been talking all program about how a lot of these companies, the bar is really high, at least when it comes to sentiment, and these misses, if there's anything to pick at, are getting punished, Carol.
Yeah, and I would say, I just want to throw one more thing in, and maybe the disappointment has to do with the third quarter outlook, right? It's seeing third quarter EPS of $1.36 to $1.60. The estimate is $1.50. It sees third quarter revenue from $4.45 billion to $4.8 billion. The estimate is $4.57 billion. So there's a bit of a range and definitely some room for disappointment. So maybe that has to do with some of the selling that we're seeing here in the aftermarket. We'll keep a watch on it, but right now shares of Texas Instruments still down about 7%. Hey, just a quick summary of some of the stocks that were on the move in the regular session. We talked about home builders, outperformance there. Here's the reasons why. D.R. Horton was up about 16% here at the close today, a top gainer in the S&P. The third quarter earnings beat expectations. Profit orders and home closings beating analyst estimates. Go to Pulte Group, also out with their results. That stock was up 12% at the close. Again, a top gainer in the S&P. They reported better than expected earnings. So that was a big one. And we got some more earnings crossing.
Yeah, looking at Intuitive Surgical, pulling it up on the Bloomberg terminal, seeing shares in the after hours, not necessarily on the move. Intuitive Surgical, second quarter revenue coming in at $2.44 billion. Estimates were for $2.35 billion. Second quarter adjusted earnings per share coming in at way above estimates at $2.2 billion. The estimate was for $1.93. Shares now on the move, higher by 5.7%.
Yeah, starting to see some reaction there after second quarter adjusted EPS beat its estimates. And this is a name that needed some good news, Tim. You consider the fact that Intuitive Surgical shares were down about 2% heading into today's close and these numbers.
All right, we have most of the big banks done reporting, but we have a financial company that has just reported, and that is Capital One. Let's give you the second quarter adjusted EPS number, $5.48. Far away beating the consensus estimate of $3.88. So maybe we're not comparing like with like. Let's look at the net revenue line, $12.49 billion, also higher than the expected $11.84 billion. Net interest margin for the period was 7.62%, better than the 7.43%. As for loans held for investment, that came out to about $439.3 billion. Analysts were looking for about $397 billion. And one comment from Capital One, the integration of Discover is going well. So we're looking for more commentary, of course, on that. Second quarter provision for credit losses was about $11.43 billion. The consensus estimate, if this is the right comparison, is $3.88 billion. That seems a little bit off, but we'll dig into that a little bit more. The stock is now lower in after-hours trading.
All right, here's one that is definitely rallying in the aftermarket, although it's having a pretty miserable 2025. We're talking about Enphase Energy. It's up almost 6% here in the aftermarket. Keep in mind, it's off about 37% year to date, the solar energy company. And let's go through some of the numbers. Second quarter adjusted EPS, that's a beat, 6 cents better than what the street was expecting, 69 versus the estimate of 63. Second quarter revenue, that came in better than forecast. $363.2 million. The estimate was $359.3. And then this is what matters, perhaps. The third quarter revenue outlook, $330 million to $370 million. That's quite a gap. The estimate is for $371.9 million. But again, this stock, Katie, is up about 8% in the aftermarket.
Yeah, it's wild. Well, you mentioned that it's having a miserable 2025. So just to put some context to that, shares down about 38% on a total return basis into the close. We know that Enphase and some of the other clean energies, some of the other solar names have been really whipsawed by policy coming out of the White House. So I guess the fact that they were able to report good news on any level, you can see the shares really taking off after hours. Yeah,
speaking of whipsawing, I'm watching shares of Intuitive Surgical. At first, they did move higher. Now they're down 4.5% in the after hours. The company did say, remember, this is the company that has the Da Vinci surgical robot. It's that high precision robot that does surgery on many different parts of the human body. They did say that procedures grew at approximately 17% in the second quarter of 2024. And now they grew their Da Vinci surgical system installed base to 10,488 systems as of the end of the quarter in June 2025. That's an increase of 14% compared to June 30th, 2024.
And just real quickly, Analog Devices and onsemi both down in sympathy, I guess, with Texas Instruments. So we're seeing some impact on some of the other chip names.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.